Hi, it's Peter Temple on Friday night, actually, June the 17th, and this is the market report for Monday, January the 20th. And just a note that I'll be out of town over most of the next week, and I will just be updating charts in the evening. I'm not going to be available during the daytime, which is probably a good thing because this market is moving incredibly slowly. We've got three volume situations, one on top of another. First of all, we're at the top of the market, so we have some of the lowest volume ever. We are going into an ending diagonal, which I'll talk about coming up here. And ending diagonals give you less and less volume as they go towards the end of the ending diagonal. So that's going to get weaker and weaker. And we're into the summer doldrums. We're into June, mid-June, and there's really nobody around. So just be careful out there if you're doing any trading. It's going to be a really choppy market. I think it's certainly been proving it over the last little while. So I'm going to start tonight with the New York Stock Exchange, and this is pretty well the same chart except for maybe one longer wave down, which is here on this little second wave that I posted last weekend. Really not that much has changed. We're just waiting for this final wave. And one of the things I will mention here that this wave in the NYSE is a little different than some of the other ones because this is an ABC wave and it's got 5 waves within it. And you can see them here, 3, 4, and so 5, and so I've labeled it that way. This wave up, when you get an ending wave, they have to be in 5 waves, and this wave up is very clearly in 3. You can actually see it here quite easily, a very large fourth, and then up. And this actually had 5 waves within it, and this area in here is a wave in 3, and so it negates the 5 waves up for this. It is a wave in 3. We've had a wave in 3 coming down. And really the only thing, if it doesn't go up in 5 waves, you have one more option, and that's a triangle. And with an ending wave, it's an ending diagonal, is what it looks like we're going to end up with just by the configuration. So we've had our first wave down here. So we've had a wave up, a wave down, and we should get a 3, 4, 5 to finish off this wave. And then this thing should be all over. How long that's going to take, I don't know, but we're probably going to get a good couple to 3 weeks out of it, I would think, or a couple of weeks, and we'll have to look for the next cycle turn date. So let's go look at the S&P 500. Here's the daily chart for the S&P 500. It's the same thing. We've got this large double-pronged second wave here, and we're just coming to an ending on it. It's the same sort of configuration we've got in this one because we went to a new low here on February the 11th. We actually have an ABC up wave, and we have another ABC here. So we've got, this is obviously a very corrective wave. They're all, in all the indices, it's pretty obvious this is a corrective wave. We're not going anywhere except to finish off this final wave and to head down in a big third wave. So looking at this wave here, we get into the intricacies of it. We've had this fourth wave, you want to call it, this B wave, which went up to a top here, an ABC. And then what I think we've got, as I've explained, is an ending diagonal, which will kind of work its way a little bit higher. Again, it'll go 3, 4, 5, much like the New York Stock Exchange. I don't think we're going to get to a new high, but we'll just have to see what happens. We really shouldn't, because in my experience, all the indices, if one gets to a new high, they all have to. But this is an historic high, 300-year high, so who knows what could happen in here. But if it does, if we do get a little throw over, which is very typical on these ending diagonals, then we actually, I suppose, could go a little higher, but it'll spike up and come right back in, would be what I would suggest. I'm not expecting that, but we'll just have to wait to see what happens as we move farther along. I think this is going to take a couple of weeks for this to trace out. We'll have to see what happens. Here we are zoomed in on the S&P 500 with a 30-minute chart. And you can see that this is the final wave here where we're looking at this ending diagonal. We had the fourth wave down here, and we had this wave up in 3. And I've got it as an ABC here. You could also mark it as an ABC here at this part. But we had a 3 in here, We had another three. This whole thing is a three because of this thing here, whatever it is. It went to a new high and created three waves up. And then we've got this other three here that went to a new high here, and that has ended up, this looks like a five here, but we've got an extra wave here. So it's really, this whole thing is kind of a mess. You can't look at this and say that this is a motive wave. So it's definitely a wave in three, which means that we haven't reached a high, and we've got to wait for this pattern, which can only be a triangle. And so I've explained that in some of my notes. So we've had a wave up here, our first wave, our second wave, 3, 4, 5 is what I'm expecting. I don't know how long that's going to take to trace out, as I've mentioned. The market's moving pretty slowly, but I've got this. Here's our previous high. Most of the indices now have reached the high. It's just that our pattern, it has not ended up tracing out, and because we haven't had 5 up, it needs to trace out a triangle, and that's where we're sitting. So that's the market, the US market in equities. I want to take a quick look at currencies because, of course, I'm a big proponent of all the same market, and it helps me a lot looking at currencies to be able to project where everything else is going. Here is the daily chart of the euro US dollar currency pair, and this hasn't changed much at all. So we're looking at this big fourth wave triangle that's been sitting here forever, and we have finished our D wave. I was concerned about this D wave because the last time we had been down here, it had missed this lower trend line, and so what happened on Thursday, I guess it was, we came down and hit it, and now we're started back up again. So this needs to go up in three waves, A, B, C to the E level here, and then turn down. And this would end up being a very large fifth wave. And that's where we are. Not much more to talk about here, but this is an ending wave, and it's telling me that the US indices are going to finish off at the same time. This is how far we've got to go. It's a slow moving wave. So again, once this reaches the E wave, I expect the US indices to be done and for everything to turn down in tandem. Here is the 4-hour chart of the US dollar CAD, Canadian dollar currency pair. This has been a real tough market to figure out, and we had this ending diagonal coming down here, and really this wave down should have extended further, but it did not. This is an ABC, and this is a correction, and we're expecting to do a double bottom down here, but this configuration has just been tough to figure out. And now what happened is we've gone down. This isn't actually a full triangle because there aren't three waves that have, this wave should have gone all the way down here. We've touched 3 times, which we're supposed to do, but it's not a complete triangle. So we've got some odd channel configuration here. But when we hit the bottom here and turned, which is the same time the US indices turned on Thursday morning, which I missed because I was at a meeting. I've been stalking this for days. It seems to be whatever happens every time. So what happened is we ended up having a motive wave down here, and I picked it up about halfway, and actually not doubled, but I made 50% on my principal, and I'm going to make another 20 here, I think. And then this wave down, we've come down in a first wave. We're retracing here in the second wave, 62%. We should get to 1.2989 or thereabouts. And then we should turn and head down here in a third, fourth, fifth wave to the top. I'm going to be following this one because I'm in it, and I'm expecting to change. Possibly Sunday, we're going up here quite quickly. Sunday, we may turn over here and head back down. And this should bottom at the time that the US indices and all the currencies find their ends of their waves. And so a couple of weeks off, perhaps. It's going to maybe take that long to get there. It's a big move, big opportunity. I would take a look at this one if you are going to follow along with currencies if you like currencies. Here is the daily chart of gold. Here's another asset that just shows how difficult this market is to actually analyze, because while I've been right all the way up here, we had this funny little surprise this last week where this ended up, rather than coming down here and doing its ABC, ABC, it's actually done an expanding, and this is you get a chance to see this now, an expanding ending diagonal because of the configuration here. I'm seeing a lot of these three prongers, and they're all over the marketplace right now. It makes things very difficult, unusual, and it's been going on for some time, and here we have another one. So it looks like we will come down and get our ABC correction, which we've been looking for quite some time. I would assume that this is going to trace out as our final waves in all the currencies and the US indices trace out. And then after we hit the C level here, I've changed this a little bit because of the height here. It's a little higher. So 1149, 1150, somewhere in that range here for the C wave, and then it should head up to about 1600. Here's my final chart for the night. This is the 2-day chart on oil, and we're in this really strange little configuration. It looked like an ending diagonal, and in fact it may come down here and go up and do a flat. But in the last couple of days we've had a wave down here, but it's in three waves, and it looks like three waves retrace, and it looks like it's heading back up now, and we'll either do a double top here or we'll extend and get up to $61. We've got an ABC here, and this wave, the C wave, is now the same length as the A wave. It will either turn at about $52, 52, I guess, yeah, 52, about $52, and it will either turn there or will extend to make the C wave 1.618 times the A wave, which would take it up to about $61, $62, which would be a flat, and it would stop and equal and turn down when it gets up to this previous fourth here. I get the feeling that's what it's going to do, but we'll just have to see and wait to see where it turns. That's your market report for the middle of June. We're into very choppy markets and summer doldrums and waning volumes, so be very careful. It's an interesting time. We're going to see a trend change sometime soon, but I can't really tell you when.